And welcome to this Market Wrap edition with our research head, Mr. Pankaj Pandey. Hello, sir. Good evening. How are you?
Hi, good evening, Gaurav.
तो सर स्टार्ट करते हैं इस वीक के मार्केट के साथ। फर्स्ट मंडे को थोड़ा हल्का, ट्यूसडे नाइट को सब डाउ देख के सीपीआई numbers which were there, which was expected to be at 2.9% came at 3.1% and Dow moved down and everybody thought we'll see a big डाउनसाइड मूव इन इंडियन मार्केट्स। बट वही वक्त बदल गए, जज्बात बदल गए, जिंदगी बदल गई बेयर्स की, क्योंकि वहां से हम 1000 पॉइंट, बैंक निफ्टी वेंट ऑलमोस्ट 1000 पॉइंट्स देयर एंड फ्रॉम देयर टुडे Nifty has scaled back to 22,000 levels. So what is your take on the index right now? Because I remember last time आपने कहा था कि we may kiss the all time high levels going.
Yeah, so I think, Gaurav, one thing is that, see, directionally, the interest rates in US are headed down. Now, obviously, there is always a debate on in terms of the quantum of rate cuts. Now, when the or before the CPI numbers came in, the expectation was that we will see about 125 to 150 bips kind of a rate cut starting from May. But I think CPI was slightly higher, but directionally, I think it does not really sort of make the market negative because even in the second half, even if you sort of see a cut of say 75 to 100 bips, which is what the market is factoring in, I think directionally things are going to be fine. It is just a matter of time when the inflation heads towards closer to 2% in US. And which is what Fed has been also sort of saying is that they'll not rush into cutting rates. I think market was slightly so it is wrong to sort of conclude that with a slightly higher CPI numbers, things have become sort of worse for the overall markets. And I think, like you said, a follow-up number on retail sales actually was weaker. So overall, that has sort of given a positive global cues. Now, coming to specific to our domestic markets, obviously we are not that much impacted by what happens in US because ours is more of a domestic-driven economy. Good part is that market has been sort of consolidating, or we have seen selling at 22,000 kind of a levels, and the last 4 5 weeks, markets have been consolidating at 50-day exponential moving average, which is 21,400. Now, our sense is that this consolidation phase is largely over because overall Nifty has closed upwards of 22,000. And our sense is that in the month of March, we should head towards new highs, possibly levels like 22,700, and supports are going to be at 21,400. So I think markets are headed higher. So Nifty is poised for a breakout.
Okay, and this would be a better thing because I think from 16th of Jan till today, it's been a month and Nifty is in that range only. And if we move after a month's consolidation, that consolidation usually is a fast one and is in a very good direction जो आप upside के ऊपर देख रहे हो 21,100 के ऊपर।
एक और चीज होती है,
हम्म,
सो जनरली इलेक्शन ईयर में फेब मार्च में मार्केट थोड़ा बॉटम बनाता है, विच इज व्हाट आई थिंक इज लार्जली डन.
okay.
So from here on, overall senses की market आपको mid double digit kind of a return देगा. So that way, I think things are absolutely fine, and earnings are also sort of pointing into that direction.
Okay, so sir, coming to corporate earnings, I think the season is almost over. I think you would have scanned all the results. So I'll ask your take on the corporate earnings that have been produced in this quarter.
So yes, overall earning season was on expected lines. We've seen double-digit bottom line growth across segments. Nifty did about 13% kind of a overall bottom line growth. Midcap at about 10%. I think, contrary to expectation, the small cap universe is quite large. So there, the bottom line growth is about 26%. Since the universe is too large, it'll take a lot of time to sort of figure out was there a base effect or not. But overall, earning growth has been 25%. And now top line growth has been sort of muted, largely because a lot of commodities have corrected. So companies have passed on the prices, and which is why things have been not so great from a top line growth perspective. And also, even from a quarter on quarter perspective, the margins have sort of come down by 100 bits because some of the commodity prices have inched up a bit. But if I sort of talk sectorally, there are 3 4 sectors which have sort of done very well. The auto is the prominent one, top line growth of 21%, largely because the volume growth itself was 16 odd percent. And we've seen companies across, be it Maruti, be it Tata Motors, be it M&M, Eicher, all of them have sort of come up with a good set of numbers. And even for them, the bottom line growth has also been quite good. Now, coming to capital goods again, since the capex cycle is on full stream, overall capital goods is another sector which has delivered double-digit kind of a top line and bottom line growth. Pharma is another sector which has seen a revival. So largely because most of your companies which are exporting to US, their complex generic portfolio has done well. I mean, across companies, we have seen 20% plus kind of a growth. So pharma is another sector which has seen a growth of 10 odd percent top line and about 20% in the bottom line. Metal, the worst of the earnings is behind us. So because quarter on quarter, we are seeing overall improvement in earnings. I think when you sort of include, say, bank, or if you sort of exclude banks, the overall Nifty growth is 15 odd percent. That is largely because SBI had a one-off because they had to sort of do a voluntary provision for wages. So as a result of that, the overall Nifty growth is 12% profit growth. But if you sort of exclude the financials, it's about 15% growth. Now, going forward, what we are penciling is 14-15% kind of a growth in earnings. So we don't really see much of a risk to the earnings overall. And which is why this 25,000 kind of a target for Nifty for the year and I think remains intact.
Absolutely, sir. I'll take sector by sector. I think that would be better because there are a few companies which have released their results in this week as well. So we'll start with auto sector, and I think Mahindra and Mahindra, the big boy of this, one of the big boys of this sector. So what is your take on Mahindra's result that has been posted?
So Mahindra, again, very good set of numbers. And I think we have already seen price reaction post results being quite good. So overall, when you sort of look at Mahindra, the tractor as a business is not doing so good, largely because of the base effect.
Yeah.
And so we have seen a decline of about 5% in this particular quarter. Probably Q4, we would see a decline of say 10%. So that is the bad part of it, or a good problem to have because of the base effect. But the best part is that the SUV business continues to do well. So their booking run rate is still in excess of the kind of capacity what they've got. And they still have bookings of in excess of 2 lakhs. So from that perspective, this is one business which will keep delivering high teen kind of a growth over the next 2-3 years. And also overall sense is that margin profile also has been sort of improving in this business. So very good set of numbers. I think one crucial aspect for Mahindra and Mahindra has been that they've been harping on this fact that they would want to sort of take their ROEs to 18%. In this 9 months, they have achieved 19%. So they have become sort of become capital efficient. So I think there's nothing much to complain in Mahindra and Mahindra's number. So I think we're waiting for price to sort of stabilize. Otherwise, I think ideally it becomes a buy from current levels, given the fact that it can or it will be delivering double-digit kind of a top line and bottom line growth.
So there's only one thing to worry here. It's like people are booking XUVs, Mahindra XUVs, because of the wait time. That is the only worrying factor here. Let's come to the next company, sir. Eicher Motor, again, fantastic set of number. I think reaction was also great. So what is your take on this result?
So I think Eicher also came up with a good set of numbers. Overall, when you sort of look at Royal Enfield numbers, continues to sort of be quite robust at 2.3. Although our expectation is that it should be a lot more higher, given the fact that it is a good premiumization play. Plus, company is looking to launch some new models, so that is the exciting part of it. On the CV side, I think while overall numbers are okay, but the margin profile for say Tata Motors, or when you sort of look at even for Ashok Leyland, is in double digits. For this company, it is still in single digits. So I think that probably needs to sort of scaled up. Otherwise, this stock remains a good premium play, and we are already seeing two-wheeler as a pack sort of doing very well. Most of the players are guiding for double-digit kind of a growth rate. And obviously, premiumization is something which is prevalent in auto across segments. So this company is one of the best plays there.
Okay. So any target for Eicher? Because I know you cover this company.
So we're still working on it, but we will have
Okay, so I'll come to next company. I think this is the company you said key interest will. This is the sector which will interest you in 2024. That is your mining sector. So coal, and let's start with the biggest mover, I think I would say, of this previous 6 months, Coal India, sir. So what is your take on Coal India's result?
So good set of numbers. I think mining companies and in fact there's a lot of interest what we see now in PSU companies. So Coal India and MDC were part of our picks earlier. Now Coal India previous target price was 500, so that is largely on the verge of getting sort of achieved. And now coming to specific to numbers, so volume growth was good at 9%. I think this is one company which is now looking like that they'll be able to achieve 1,000 million tons kind of a overall run rate, which is what they've been sort of targeting for a very long period of time. And good part is that the EBITDA per ton is also sort of inching up to nearly 600 rupees per ton compared to say 460, 470 odd, largely because the e-auction realizations are a lot more higher. And as and when the production keeps on going up, the overall EBITDA per ton is going to sort of go up. So from that perspective, this company looks good to us. Valuation wise, it is also attractive, 6-7% kind of a dividend yield. So I think PSUs are in favor, and I think Coal India should be in that top of the list, and even NMDC also, because if I come to NMDC's numbers, NMDC also came up with a good set of numbers. I think there was a point in time, say 2013 to 2021, volume growth for NMDC was flat. But from there on, the volume growth has been double digits. So from that perspective, our sense is that they will be easily able to achieve, say, 46, 47 million ton in 24, about 50 million tons in FY25, then 56, and then their eventual target is 100 million tons. So it looks like that their volume growth is on track, and since they have taken the price hike, so EBITDA per ton also has come up with overall improvement has been pretty good. So both the companies have come up with good set of numbers, and our sense is that they'll sort of keep performing the way they've been performing recently. It is just that we don't want to sort of give a very short-term target, so we are sort of recalibrating our targets for capturing the longer-term trend as well.
Absolutely. And so one thing that I had a chance to look at NMDC, and Nalco also had reported the numbers one day before. So one good thing has happened is that margins have improved. And even though for Nalco, I was seeing that top line remained constant, but their PAT went almost double from what it was a year back. So they've reduced their cost and everything, and they are achieving very good in terms of margin. So that is a very good positive which comes out for at least the mining company, NMDCs, the Nalcos, and all those of the world.
Absolutely. So I since we track NMDC and Coal India, so I can talk about that. Nelco, we still don't track.
Okay, no problems. Sorry, I went on mute. So moving from mining, we'll move to pharma. Sir, again, I think today's session, pharma was the flavor. I think pharma, all pharma stocks are firing up. Glenmark, we had Glenmark's result and everything did well. So I'll start with the leader, DV's. What is your take on DV's result in pharma space?
So I think pharma, after for a long period of time, hasn't really sort of done much in terms of price performance. So it's a bit sort of underowned. And this is like, for example, mining. The valuations are quite okay. I think pharma is another sector where you can't really complain that the valuations are rich. Now, the only challenge was that a lot of businesses were sort of struggling, but what we are also seeing is some green shoots available in or being seen in some of the business, not in total. Now, coming to DVs specifically, largely when you sort of look at, so DVs derive the revenues from two perspectives. One is the CSM business, and the other is the API business. Now, in API, the dumping is still sort of going on. So obviously, there is a pressure on margins there, and the volumes or the top line have sort of degrown there. But good part is that the custom synthesis business for them has grown by 25%, and margins for or gross margins have for them have come up to 60%. So that's a sort of a heartening part. The other aspect is that their new facility in Kakinada, I think, should be operational next year. So that will also start contributing. And what they're also sort of saying is that this API, the margin pressure, what they're witnessing, I think might be there for a quarter or two, because that is when the destocking and probably this price pressure might sort of come off. So, so another 1 or 2 quarters down the line, the numbers will structurally start improving. And our sense is that the markets typically will start sort of factoring in all these positives much in advance, while the numbers might take some time to sort of shape up. But directionally, things are turning positive for pharma as a pack. We've already seen the US-based exporter doing very well in terms of price performance. Now the numbers are, you're getting the numbers in terms of 20-25% kind of a growth for a lot of companies. I mean, be it Dr. Reddy, be it Sun Pharma, even Aurobindo. So all of them are sort of doing. So from that perspective, this is one company which has come up with a good set of numbers. Our sense is that going forward, as things structurally improve, this stock will sort of keep doing well. The other one, so chemical also has a similar problem
I
because
was coming there.
yeah.
You can continue, sir. Yeah.
So chemicals also, if you look at a lot of chemical companies have made losses because of the dumping which has been sort of going on. That has sort of depressed the prices and all. But we do see some bright spots there also. So PI is one company where things have been slightly different. So this is one company where the overall growth has been good. And this company is also guiding for a decent growth. Now, good part is that bulk of their revenues come from the CSM business, which is a kind of a contract manufacturing. And that is where the overall growth has been, say, good. And I think overall margin profile here also has been good. Their ordering value or order book remains strong at about $1.7 billion. And so this is a sort of a bright spot within the entire agrochemical or chemical space where most of the companies, even the best of the lots, have witnessed a decline in the margins or there has been pressure in the top line and everything. So I think probably 1 or 2 quarters down the line, a lot of these things will start changing for most of the companies. And I'll not be surprised with the kind of move what pharma or some of the chemical names could attract going forward, because this is one space where it's not a crowded space. So overall, our sense is that things will keep sort of getting better. And which is why I think if somebody can withstand somewhat of a time correction, then pharma is a sector which can do well or which can sort of outperform the market.
Absolutely. I think, sir, UPL also comes in the same sector for PI industries, right?
Correct. But what we like more is say something like Sumitomo or this company which have got some bit of a contract manufacturing. Like UPL is a sort of a giant, and typically bulk of the revenues come from global markets. So which is why we
Yeah.
don't have a view on UPL, but what we are tracking is only select chemical companies.
Hey, given that UPL underperforming and PI underperforming shows that there's something right that this company is doing. And with cycle being in its favor, I think this would be one stock to watch out for going ahead.
Absolutely.
Yeah. So, sir, there are a few questions. So I'll take those questions and then come to our hidden gem section.
Sure.
So one question is on RHI Magnesia. I don't think so we cover this, so I'll skip this question. Sir, GSFC target, if you're covering GSFC.
So we don't have a fundamental coverage on GSFC, but I think you can write it to us. We'll sort of have that responded by the technical team, if that
Okay.
helps.
Okay. So the email ID viewers is pankaj.pandey, Pandey with a Y, @ICICIsecurities.com. You guys can write it to him, whatever doubt you have. We'll just get responded. And please give us at least 1 week of TAT because there are other work as well. Sir, one stock that you have covered, Mr. Asim Kejriwal is asking view on Mayur Unicoaters.
Now, Mayur Unicoaters is in a very interesting space, especially on the technical textiles. So they supply seat covers for most of the auto OEMs. Plus, they have got approval for supplying to global OEMs as well.
Yeah.
But somewhere down the line, what the company promises, actually, when you sort of follow it with numbers, so there is some missing link. So overall, what company talks is quite promising. I think it needs to sort of deliver 1 quarter to sort of for that to sort of become believable, and which is why the stock is still struggling to sort of outperform or relatively give a price performance. So our sense is that we are bullish on the stock, but we will wait for a quarter or two, and if things don't come up, then I think we will then probably not really sort of give too much weightage to what the management has been sort of saying. Then we'll have to probably discount, and then the stock will languish. But I will not prematurely sort of judge that. So,
Yeah.
given the fact that there are a number of global events which are sort of keep happening, so 25% of our exports go through the has been impacted because of the Red Sea crisis. So there are a number of challenges there. So let's see for a quarter or two if the company delivers on expected lines. Ideally, the stock is good, valuations are attractive. So it's more of a wait and watch for at least 1 or 2 quarters.
Absolutely, absolutely. Sir, I think Hardik sir, we do not cover SKF and Timken, if I'm not wrong.
No, we do cover SKF and
We okay.
Timken.
Sorry.
So Timken has got a higher export leg, and exports are a sort of a challenge for a lot of bearing companies. SKF overall numbers are okay, but I think since for them a lot of volatility, especially because of the higher raw material prices, and that has sort of led to muted margins for some of them. So overall, the numbers are still sort of muted for most of these bearing companies. But I think this is one segment which has not really done much of a price performance. We've seen a decent amount of price correction. I think the moment export leg sort of revives for some of these companies, then I think that these companies will be back in shape.
Okay.
So ideal suggestion would be to sort of hold it on for some period of time. These are
Okay.
good companies, yeah.
Okay. Sir, one company I know that you have covered is Cann Homes, because I still remember that journey.
Correct. So, Cann Homes, our sense is that the entire housing finance companies ideally should do well in the second half when we see when the prospects of interest rate decline. Because typically, what happens is that when the interest rates go up, the margins for them come under pressure. But Cann Homes had a separate problem, so they had to do a provisioning for one event which had happened, and we've seen the price taking a significant amount of beating. Otherwise, this is a very good company. So in the housing finance space, they've been able to maintain gross NPAs below 1% across cycles. So that way, their credit discipline is good, and we feel that while it may not really do immediate price performance, but valuations are attractive, and ideally in the second half, it should see a lot more action. And housing, we all know that has been sort of doing well for industry in general.
Absolutely. I think viewers, I won't be able to take more questions because we have one more section to cover. You guys can come back, drop your doubts here. We'll try to take it in the next session. Sir, तो question views हो गए, questions हो गए, बातें hidden gem के ऊपर. तो आज कौन सा sector, कौन सा stock?
So we've given, or I would want to sort of recommend Mast with a target price of 3,500. It's IT stock. Typically, bulk of their revenues used to come from UK and Europe region. Now the company is diversifying into US as a territory. And historically, last 4 5 years, they've grown well. So they've grown their revenues by 20%, profit in excess of 30%. And our sense is that even going forward, they will continue to grow at 15-16% in terms of overall top line growth and 20% nearly growth in terms of bottom line. And I think they've done some acquisitions in the US to sort of ramp up the pie from or the growth which they get from the US. So their US business contribution has now improved to about 28 odd percent. That used to be about 21 odd percent 2 3 years back. And so this is one stock which is available at attractive valuations of say 22 times. So we had given it today. So some bit of a price appreciation has happened today. But our sense is that there's still further more room left. Probably the company might be looking to sort of do a fundraise for further acquisitions. So it has got a decent number of growth plus other triggers for this stock to sort of trade higher.
3,500 is the target. I think it is hovering near 3,068. Sir, one question I've forgotten. There's been some good upticks in hospital sectors, right? Well, yesterday last Friday we spoke about Apollo Hospitals. So your view on this sector as a whole?
So I think hospital as a sector has seen a very good price performance. I mean, you look at across the players. So we are working with numbers for most of the players, and we will come up with probably a sector rating. Like I said, this is one sector where the trend is quite consistent. And what we have seen, so I've got some more data on hospitals. So, for example, this is one segment where the overall top line growth has been 10 to 13 odd percent for all the companies, largely.
Right.
Then you have seen EBITDA growth also being at 15 odd percent. So EBITDA margins have improved by 1%. RPOP growth, which is what the revenue, what you get per operative bed. So that has also been in double digits of 10%. All of them have increased their beds by 1 to 3%. Then occupancy growth has also increased by 1%. So all these hospitals are sort of operating at different regions.
Yeah.
But what you see is a very consistency in growth. So I'm amazed by that growth, and which is why I feel that this sector, despite the price performance, needs to be sort of seen from a different perspective.
Yeah.
The perspective what we are now looking at is that can this be a secular consumption kind of a story? Because what we are also sensing is that see, despite the overall growth in occupancy, we are seeing across players the capacity addition in the
Yeah.
range of 30 to 40 odd percent. One point of time we were worried when the hospital used to expand is that once they sort of expand, the numbers will sort of get dampened, largely because the new hospitals used to take a lot more time to sort of recover money. But with the consistency being shown by companies or hospitals across in terms of expansion, I think that's clearly sort of a different sign
Yeah.
altogether. So, which is why I think this space needs further sort of homework, but definitely looking a lot more interesting. And like I said, it's a far more better consumption than what you see for FMCG as a name. So I'll
Absolutely.
not be surprised over the next, say, decade. This is one stock which can sort of one segment which
Sector.
can
Yeah.
outperform FMCG as a pack quite handsomely.
So, sir, I'll just ask one more follow-up question to this. Be looking at top players like Apollo or Narayana is also there in the space. Medanta is also listed because I think Medanta was Medanta was in action in, I think, today or yesterday. I don't remember, but it was amongst the top five gainers of Nifty 500. So, your focus is only on Apollo, or you are planning to look
No, no.
across?
So we are going to look across. So Apollo for Pan India or for Max for Pan India presence. Then you have Narayana,
Yeah.
especially for the heart,
South.
and then you have HCG, which is largely sort of a cancer specialist. Then you have Shelby, which is largely into knee replacement. So we are looking at the players across, and then you have Rainbow, which is a chain dedicated for kids.
Yes.
And the trend is consistent across. So that way, I think we are going to look at from all the perspectives.
Well, the disease can also decide whether the hospital will do well or not. Given
Absolutely, absolutely, absolutely.
Absolutely. So yes, sir, that is what I had today. All the questions. Thank you so much for taking time as usual on every Friday. So viewers, see you guys next Friday with same time and with Pankaj sir and some new companies and sectors. Thank you so much, sir.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.